Hello traders, you are watching the weekly Forex outlook by Light Forex. From this video, you will discover the prospects of the main currency pairs. The USD declined last week, as you can see from the weekly chart of the US dollar index. American currency broke below the major support line, which will now act as resistance, and support is provided by the 50-week moving average. The decline below this level will open the way for more significant downside. The main negative factor for the American currency were the expectations of Federal Reserve's rate cuts this year. Actually, the market is pricing in 96% chance of one rate cut and 86% probability of two rate cuts. This is a major negative factor that will limit the upside in the USD and keep it under pressure. In addition, America released weaker than expected labor market data on Friday. Non-farm payrolls or NFP came out at 75,000 versus the forecast of 185,000, and wage growth also was weaker than expected. As a result, traders will keep worrying that trade tensions have negative impact on the American economy, and will pay great attention to further releases from America. To have a sense of what awaits us in the upcoming days, we will check the economic calendar at lightforex.com. On Monday, it is a bank holiday in France, Germany, Switzerland, and Australia, so liquidity will be lower. Also, we already got the information that China released trade balance figures, and despite the fact that exports returned to growth in May, imports slumped by 8.5% on the annual basis. This means that China's domestic consumption is weak, and the key economy of the world is having significant economic problems. That is negative for the market's risk sentiment and currencies like Australian and New Zealand dollar. Britain released industrial production and manufacturing production. We see that the readings are negative. The indicator is contracted. This is the sign that Brexit is having a major negative impact on the British economy. The GDP figures, both monthly and quarterly, were also disappointing. In addition, Boris Johnson, one of the main contenders on the position of the UK Prime Minister, promised a hard line on Brexit, and he also said that he can accept a no-deal Brexit that increases the negative pressure on the British pound. On Tuesday, pay attention to average earnings index in the United Kingdom. The forecast is that we'll see the lower indicator, and America will release inflation indicator PPI, producer price index. On Wednesday, we'll hear from the RBA Assistant Governor Kent, and Australia will release Westpac Consumer Sentiment Index. There will be China's CPI and the speech of the European Central Bank President Mario Draghi. Last week, the ECB sounded less dovish than expected, and as a result, we didn't see the decline in the euro. On the contrary, the single currency managed to regain some ground. The US will release CPI figures during the US session on Wednesday. On Thursday, during the Asian session, the attention will be focused on Australian employment figures. Then there will be a meeting of the Swiss National Bank, but no changes are expected there. On Friday, China will release industrial production figures. There will be also the speech of the Bank of England's Governor Carney, and the release of core retail sales and retail sales in America. This is a major indicator of American consumer sector, and it will have a major impact on the USD. You can see that the forecasts are rather good. Also, America will release consumer sentiment on Friday. So let's get back to the charts to check what's there with technical picture. Before we get to the major pairs, have a look at the chart of the USD versus the Mexican peso. Here was a big bearish opening gap and the pair declined. It happened as the US and Mexico struck a migration deal to avert a tariff war. This certainly improved the picture for the Mexican peso, and the currency pair may test this moving average lines and even the support around 19. Bulls will become more active if the exchange rate returns above 19.35, and the next resistance is at 19.50. Euro dollar rose last week but met resistance at 200-week moving average around 1.1345. Here we can say that the euro certainly made some progress, and as long as it manages to stay above 1.1270, it will be able to consolidate between this level and 1.1365, where we find the declining 200-day moving average. Still, the overall dynamics is certainly negative, and the euro is here only because the USD is weak. We do not have major releases from the euro area, so the focus will be on the American data. Above 1.1365, the next resistance is at 1.1445, and the loss of 1.1270 will open the way down to 1.1215. The British pound recovered last week, but even the broad weakness of the USD didn't allow the pound to break above 1.2770. If it does this week, then we'll target 1.2890 mark. If not, and if the pound keeps testing the levels of 1.2680 and 1.2667 moving averages on the 4-hour chart, the decline below this level will confirm a triple top and open the way down to 1.2610 level. Dollar-yen currency pair tries to recover and testing resistance in the area of 108.55. All in all, the pair is capable to test higher levels around 109 mark, but there is significant resistance between 109.25 and 109.50 mark, so we do not expect the pair to break above it, and likely sellers will re-emerge if dollar-yen approaches this area. If the prices turn down and if we get below 108.50, then the focus will be on the downside on the recent lows around 108 mark. US dollar Canadian dollar made a big breakthrough to the downside. For now, the currency pair is supported by the 50-week moving average around 1.3225. The break below this level will get us to 200-week moving average in the area of 1.3120. And the resistance is now provided by the former support at 1.3380. It should be a significant obstacle in case the USD recovers. Australian dollar remains versus the major negative trend. It was stopped by the decline in 50-day moving average and the key level of 0.70. The price declined. The decline will find support around 0.6944, and as long as we stay above this level, Australian dollar will keep trying to test higher levels. However, even if it gets above 0.70, the next significant resistance will be in the area of 0.7067, the downtrend line, the 100-day moving average. So all in all, the way to the upside should be difficult for the currency pair. As for the New Zealand dollar, here the way up is also rather complicated, we see that the pair met resistance around 0.6660. There are more strong resistance levels just above 0.67, the Fibonacci level, the moving averages. And as for support, it should be located around the lows and Fibonacci at 0.6585. As long as we stay above this level, the pair will be capable to turn back up and test 0.6660. Below 0.65 at 85, we'll have the next targets around 0.6545 mark. Gold tested the levels above February high at 1346, turned lower, but very significant support in the area of 1325, 1320. Only below these levels, the return to 1310 and 1300 marks will be possible. Gold can consolidate between the support levels and the resistance levels, and mainly the price will be driven by data out of the United States and news about trade talks between the United States and China. Finally, oil traded in a very volatile fashion, and we can expect that this situation will continue until the OPEC meeting on the 25th of June. Oil managed to close above last week's lows and may try to recover towards 66.90. However, the return below 64 will make the price vulnerable for a decline to the level of 60 and lower. This is all. Thank you for your attention and trade with Light Forex.